Hello everyone, welcome back to my channel. This time we'd like to discuss about topic 3 and it's the review video for the midterm quiz. Let's go for it. Share market. So just what I said before, we'll escape the we'll just quickly escape the escape the basic concept of the topic and discuss the main topic here. Let's continue. First is cooperation. Cooperation is public cooperation. Corporations advantage, disadvantage. There is the agency problem. So first question is about agency problem. Agency problem. Yes, conflict interest between it means the conflict of interest between principal and agent. Principals and agent. That's the key parts. And on the left hand is the advantage of the large amount of finance relevant costs, liquidity or security, facility diversification, segregation of ownership and control. Next is introduction of stock change, and what's more important is the role of stock exchange. In the last topic, we discussed about the function, the benefits of the commercial bank, asset transformation, credit transformation, liquidity transformation, economic role. And now it's the point it's the key point discuss the role of touching. So let's first one is primary market role. Next is the secondary market role. Third is the managed product role. The fourth is derivative market role. The fifth is the interest rate market role. Sixth is the trading and settlement role. Next is the information role. Last one is regulatory role. So what are these role mainly? Discuss primary market law facilitates. So it's efficient and orderly sale of facilitate the new securities. IPO right issue, placement, dividend, reinvestment plan. And the secondary market is associated existing securities. A negative liquidity will not secondary market increase appeal of buying new share in the primary market. Yes, next is about main product role. So it do not discuss in later time. So we need to use the chat to have further explanation of these the remaining topic. So screen card explain the expand the role for me. Primary market role, which is existing shares traded. Trading of include ETF, trading of investment funds, allow investment to divert. Yes, allow to diversify easily. Trading of investment fund. Yes, allow investor to diversify easily. And the derivative market is use hedge risk. Trader use hedge risk and speculation, including options, futures, hedge risks. Interest rate market role is trading fixed income security, help governments cover borrowing money. Interest rate market role trading of yes, including bond interest rate products, help governments and companies borrow money. Interest rate market role help government and companies borrow money. Trade and settlement role is easier accelerate and complete trading into trade exactly and complete properly. Handles cleaning settlement in a trading and settlement role is ensure trades are executed properly. Yes, information role make information help investor make informed decision. Yes, regulatory role is about fair and transparent maintain fair and transparent market. Great. So about the stock exchange, we need to remember the primary market role and the secondary market role, and the trading and settlement role, information role, and the regulatory role. We need to remember the five: primary role, primary market role, secondary market role, trading and settlement role, information role, and regulatory role. And we need to remember another part about others, which includes management role, managed product role, derivative market role, interest rate market role. Yes, that's all. Next one, we discuss about the cooperation in share market. Yes, the cooperation objects. So next is four main aspects of financial management to be financial management to be considered. How should the fund raise money? So, mm-hmm, yes, IPO, yes, right. So we need to make it briefly. So first question is how. So the first is raise money for investment. Investment. It's a question about how. The next question is about what should what about undertakes question is selection. So about what alternative analysis. And this number 3 is about how to manage current assets. Current how it's called the leverage. Number 4 is about how the firm pass the term. Return to shareholders. Yes, first aspect is about how to raise money for the investment. What investment should we select? How to keep the leverage of the company, use capital structure, return risk, yes, financial business risk and financial risk. Business risk, financial risk is cash flow of the business, leverage financial risk. The level of business risk depends on the type of operation. The level of risk impacts the financial security holders, both state and equity. Interest rate risk, foreign exchange risk, credit risk, capital risk, country risk, financial risk, and the business risk. So we can watch the vocabulary here. Yes, principal, both direct, no liability. So it's about week 3. System risks, non-system risks. No, it talks about OTC. Business risk depends on excuse me. Financial risk is the value of the assets, liability, and cash flow of the business operation. Business risk is the operation. Financial risk is the assets and liability for the company. D ratio in IPO. So in the IPO, the process of IPO, appoint an investor, work, for instance, making program, commerce, portfolio process with ASIC, 5% list, processing of listing application, 5 making an offer period, filling closing offer, share trades. Shareholder have voting rights. All original share in limit LLC limited liability company, principal source of income of most listed company. Shareholder have voting rights. Shares usually sold fully paid or can be partly paid. Partly paid can have the contractual obligation to pay the amount which is called or due. Shareholder's liability limited to the price of former share. The low liability company is shares issued are partly paid, typically used for highly speculative entries. Shareholders may tend not to meet future call, in which cases shareholders may decide not to meet future call, in which case they forfeit, do not understand. I do not understand the no liability company. No liability is special type of company. Australia, where shareholders are not forced to pay future unpayment on share. If they don't pay, the team will lose their share. In most companies, if you buy share, the public share, you must pay the rest of years. But in company, you can choose not to pay it. The only consequence you lose the share, you are not legally chased for the money. Why? For high risk industry, okay, it's a protection for that. Right to placement, dividends, reinvestment schedule, preference share, convertible notes, common issue options, and equity warrants. For discount rate issue, renounceable. Shareholders may sell their rights, may not be sold. Typos: placement, renounceable, renounceable. Shareholders may sell their rights. Yes. Placements, directly to investors. Issue directly to select investors. Prospectus, dividend reinvestment. Dividends give shareholders option of reviewing new share instead of dividends. You can revise or part of any dividend paid instead of receiving dividend cash. Yes, revise the dividends into the capital premium. Pros and cons. The cons of reinvestment: shareholders do not typically know the number of shares they will receive. Preference share, yes, preference share is fixed interest rate, but not change the D ratio, debt to equity ratio, convertible hybrid. Common issue option and equity warranties. Common issue warranties provide rights, not obligation. Attached corporate issue, generally attached to the corporate bond issues, non-detachable or detachable from bond and treated separately. Detachable, non-detachable, recurs detachable. The investment decision. In the investment decision, we discussed about NPV and IRR. Yes. So we need to ask GPT about indifferent. What is the advantages and disadvantages of NPV? Sorry for that. Yes. Sorry. NPV value to consider time value. So for the NPV, so the pros is time value, use cash flow, durable value creation. How much is added to the considered work well for common projects? Rely on focus. Yes. Cons. relies on forecast cash flow, hard to understand, not ideal for a large project. They have higher but lower efficiency, not ideal for the initial return per dollar. Yes. High NPV, maybe low efficiency. Assume investment is of assume intermediate cash flow or reinvestment the discount rate. Process time value and direct measure of the value creation work well for comparing projects. What? And what about IRR? Is discount rate that making PV equals to easy to understand, consider time value. If cash flow more than once, if cash flow change, you can get multiple IRRs, confusing and misleading. Thank you, wrong ranking. For multi-exclusive IRR may pick the wrong one. May not exist, capable number no at all. A single project can have higher up, but yes, a small project may have high IR. Yes, that's the problem for the. That's the problem. Yes, I got it. Yes, we finished that. Thank you so much.